Well, my next guest titled yesterday's research report to his client says, "A detour need not a journey in." Sounds a little Yoda-ish, okay? Let's bring in Oppenheimer Asset Management, their chief investment strategist, John Stoltzfus. And John, you know, let's go back to last Friday. Were you getting a lot of calls, a lot of people panicking?
No.
Really?
We really
You
weren't.
trained your clients well.
Let me tell you, I've been now with Oppenheimer for the last 13 years. I've been in the business for 42. But in the 13 years, what we've done is we say, know what you own, know why you own it, and have rational expectations in terms of right size, depending upon where the economy is at a given point versus the sectors that you're exposed to.
So you began the report and you said, let's focus on the Fed, which I thought was really interesting. A rate cut in September by the Fed could serve as a down payment. I thought this was an intriguing line, a down payment for Wall Street and Main Street. What does that mean?
Well, as a down payment, essentially, it's not a big move in terms of the rate cuts, but it's a statement. In other words, as if you're walking into a store, you make a down payment on an item. Doesn't mean you're going to pay off the whole thing right away. And so what we think is 25 or 50 bips in September, maybe something at the end of the year. And we think the economic data, as of the jobs number last week, the services number today, would really tell us there's an opportunity for the Fed to cut.
Yeah, and so, I mean, and also to me implies that there's more to come. If it's just the first one, there'll be more to come. We'll have an accommodative Federal Reserve. In the meantime, I noted that you like cyclicals over defensive, right? The names here. And so what's interesting to me is the cyclicals done very well. Of course, there was a point where everyone got defensive. Cyclicals have taken the lead here. But cyclicals suggest that the economy is okay. So, well, the economy is okay and the Fed is cutting. Does that, you know, does that juxtapose there?
Well, we do think so, because remember, the Fed took the benchmark rate from March of 22, was in a band from 0 to 0.25%. It stands now at 4.25 to 4.5 is where it's at now. That's a big move upward. It was needed to bring down the inflation rate, the pace of inflation, and so now they can pull back a little bit. But we think they're watching their dual mandate to produce an economy that essentially can grow at a sustainable pace without producing untoward levels of inflation. And then on top of that, doesn't disturb the job market to the extent that we keep extending the period of avoiding a recession. And we think that's very healthy.
Also, you say seek out the babies. What are the babies?
The babies could have been some of those great stocks that got whacked last Friday, you know, and some of them that are still limping a little bit. Right. You got to look and you think, what's the management like? What's the cash flow? You know, revenue growth? What type of products? What's the profitability? All that stuff, and you can. That's how Buffett made his money, you know. They don't go there all the time when everybody's chasing the stocks up. We believe you need to be in the market rather than trying to move in and out.
I got you. And let's take a look at just your sectors. Overweight information technology, consumer discretionary, and industrials. Now, these have been big winners this year.
Industrials is actually the best performing sector. If you ask the investor on the street, what's the best sector this year, they'd probably say tech or communication services. But when they look at it, at long last, and what that shows is the broadening of the market into other sectors. And it gives you a hint of what technology will do to help the other 9 sectors. Because remember, you got tech and communication services that are primarily tech related. You can see greater efficiencies, better profitability, sustainability of earnings, and likely for the consumer, because technology is embedded both sides of business and the consumer, greater efficiency in dealing with the companies they interact with.
Real quick, you're still at 7,100 over the next 12 months?
You bet.
My man. I don't know if they're going to invite you back to the club, but you're okay with me. John, great work. Appreciate you.